Traders and investors welcome a fresh month for the market as the economy shows encouraging signs. In today's cover story, lawmakers seek tax support in a scramble for immigration reform. Plus, the shocking new airline fee some are calling a serious PR problem. And seafood fans break out the bibs as lobster prices sink. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Tuesday, September 2nd. In today's First Look, will a September swoon follow a hot August? The S&P climbed to around a 3.6% gain last month. That's about the best August since the year 2000. September, though, tends to be a shaky month for stocks. Treasury Secretary Jack Lew is planning a speech for September 8th to take on the controversy over tax inversions, and a Crafty stock sale is in the works. Kraft Foods is offering up 1.5 million shares on social media. Investors can spend as little as $10 to buy fractions of the stock. Trader Daniel Stesich, fresh off his long holiday weekend, joins us now. Good to have you on the show. You're with Athena Advisors. Will we see any surprises in September, Daniel?
You know, if we see any surprise, I think they're going to be more to the upside than anything. People have dampened enthusiasm for whatever reason, and I think it's events going on overseas more than anything else. So, if anything, I don't expect anything real drastic, but maybe a couple upside surprises.
What correlation should investors be watching for between stocks and bonds?
Okay, you know, now this is real interesting. This bond has really perplexed a lot of people, myself included. We have a 10-year yield down at 233, and I don't think it should be that low. But with all that's going on right now in Ukraine and Russia, I think that's probably the primary reason for it. Normally, you see bond yields rising as the stock market rises. I think the bond yields will start going up. Back
in the good old USA, the economy is edging higher. There's no denying it.
No, there isn't. If you look at last Friday's Chicago PMI, and I'm not a big fan of regionals. As a matter of fact, I don't pay attention. But there was an 8-point difference from what came out and what they expected. So it was a very strong number. And this week we have the ISM, the Institute of Supply Management, both manufacturing and non-manufacturing. In the past few months, they've been really good. I think that's going to continue. I think that tells you a lot because it's a non-government release. It's independent surveys of 300 companies across the country, and they asked 11 different questions. So watch it. Keep an eye on those.
Thank you, Daniel. Have a great trading week.
Thank you. You too.
Tech Coppola has more now on that blowout number on manufacturing.
Angie, good morning. That blockbuster manufacturing barometer was a stunner. The Chicago Purchasing Managers Index rose to 64.3, exceeding economists' expectations of 54.8. And strong demand is building for September. Alessandre France, the Chicago Bureau Chief of MNI, says purchasing managers are looking past a recent blip.
Last month, when we had a big dip in our indicator, the purchasers were really cool and collected, and they said, don't worry, the demand is there. We've been talking to our clients. We have lots of orders on the books, lots of orders that are promised via a handshake. And if the purchasers are saying that they think that demand will be strong through the rest of the year, I think that that is a very good indication for, expansion and sustained growth through the end of the year.
France adds that orders are already on the rise in anticipation of another harsh winter.
The Farmer's Almanac predicts the nation is in store for below normal temperatures this winter. And after this year's blast of bitter winds and super snow, oil trader Phil Flynn believes heating oil is putting in a seasonal bottom, and he's taking the long side of the trade.
You know, I'll tell you what, to ignore the Farmer's Almanac, you do it at your own peril. I mean, these were the guys that predicted what happened last winter. So I don't know. I'm not going to fade them. I believe that it's going to be a cold winter just based off the cold summer. And if they see those woolly caterpillars getting really fat and big covers on, I'm going with the Farmer's Almanac.
Well, the forecast coming from meteorologists might not be as bone-chilling as the Almanac's projection. The official winter prediction from the National Oceanic and Atmospheric Administration is due in mid-October.
Morgan Stanley is getting into the natural gas business. The bank filed a plan with the U.S. Department of Energy to build and run a compressed gas facility in Texas that'll have the capacity to ship 60 billion cubic feet of compressed natural gas per year. It's an alternate way that could replace oil for power plants in Caribbean nations as the U.S. extracts gas from fracking. After regulatory approval, the plant will take 12 months to complete.
China is giving added oomph to Tesla shares. The stock shot up to an all-time high on Friday as the electric car maker sealed a deal with China Unicom. That agreement paves the way for Tesla to place supercharging stations in 100 Unicom stores in China. China Unicom is the second largest mobile phone carrier in China.
We are rapidly approaching a critical week for Apple. September 9th is expected to introduce its latest smartphone, the iPhone 6. And tech news website Recode is reporting that Apple will likely unveil a wearable wrist device for health and fitness monitoring and controlling devices in your home. And to top it all off, an updated operating system, iOS 8, is due out also.
This will probably be the biggest announcement that Tim Cook has done and will do for some time. This will really showcase whether he's the right guy for the job or the wrong guy for the job.
Historically, Apple stock has taken a bounce upward in advance of big announcements, but has then dropped afterwards. About half of Apple's revenues depend on its iPhone sales. Reportedly, the company has asked its manufacturing partners to increase iPhone production by as much as 40% over last year's initial iPhone 5S and 5C run.
The House and the Senate will be back in session next Monday. Kai Sisson joins us from Capitol Hill with one of the hottest topics in town. Good morning, Kai.
Hi, Angie. Big companies such as Cisco, Intel, and Accenture say that they have the solutions to many of the problems plaguing immigration. Politico is reporting that the White House has had, quote, productive listening sessions with over 20 business leaders as they try to assemble ideas on how to move forward on President Obama's pledge to reform immigration. Some call it reverse lobbying, as the White House seeks support and ideas from major corporations to ease the immigration process. Global companies want to hire talent from around the world, so an organized immigration system is necessary.
I don't know if they would word it this way, but basically they would say, listen, you guys are the people who need an immigration policy so that more foreign nationals can work in the United States. You need more programmers, you need more engineers, whatever, and we want to make this happen too, but we need your support.
Accenture said in a statement to First Business, as a global company, we closely monitor visa requirements in the U.S. and around the world. As appropriate, we meet with government officials to explain our industry's need for the visa process to be consistent, fair, and predictable. This strategy by the White House to rally support from big business could mean a continued expansion of the president's executive power, as his frustration grows with a Congress that will not bring legislation to the table.
And, it continues to be my belief that if I can't see congressional action, that I need to do at least what I can in order to make the system work better.
He's been talking to business leaders, hoping to give them a couple of things that they want, hopefully to mute criticism from his perspective. So it's really kind of a miniature comprehensive approach like he had in legislation that he wasn't able to pass through Congress. Now he's trying to cobble together that same coalition through executive orders.
While the wide majority of Democrats stand by the president, some Democratic senators are worried that any action the president takes, especially if he goes around Congress, could sway independent voters in key Senate races this November.
It looks like a lot of the states where the Senate elections are, it's not going to be very helpful to them. Places like Arkansas, North Carolina, and other places like that where there's not a high immigrant population. I think that this kind of order could backfire.
The White House is looking to put forth several executive orders this September, and with major companies in support, President Obama may be able to secure his immigration reform legacy, regardless if it affects the election. Angie?
It's going to cost more for older children who are unaccompanied to fly on American Airlines. Effective tomorrow, the airline will charge $150 each way for children between 5 and 14 years old who are traveling by themselves. It extends the fee that used to apply to kids between 5 and 11.
What's happening here, those airlines have a mandate from Wall Street and from their investors. We want a bigger share of that ancillary revenue than we're getting. And the bag fees just aren't going up, generating the revenue they thought a few years ago. So there's all this pressure on other fees. This one, though, has real consequences. A 12, 13-year-old kid is quite capable of traveling alone. This appears to be a bit of a money grab.
The extended age for the fee applies only to new tickets purchased on or after September 3rd, but it's considered a public relations blunder by some.
A really creative public relations strategy could have been taking this to the next level, and it could have been actually a positive. Maybe they employ tablets for the youth to use, or have a special healthy kids meal for kids that are flying alone.
Here's a comparison of fees some airlines charge for unaccompanied minors. American charges the most across a wider age range. Southwest and Alaska charge the least.
Investors may soon be able to get their hands on shares of Chrysler. It's been 7 years since the car company has publicly traded. Fiat and Chrysler are merging to form Fiat Chrysler Automobiles. According to a statement from Fiat on Friday, the deal is steering closer to becoming a reality, possibly by mid-October. The headquarters would be located in London. The stock would trade on the New York Stock Exchange.
A number of stars in corporate America prove hard work pays. And they should know they started as interns. According to MSN Money, GM CEO Mary Barra, who is the first female leader of a U.S. automaker, started as an engineering intern. Kevin Liles, former president of Def Jam Records, once worked for free. And Daniel Hess, who heads Sprint, interned at AT&T. Xerox CEO Ursula Burns made an historic climb, becoming the first African-American female CEO at a Fortune 500 company.
Checking the economic calendar for today, it's the ISM Index for August, as we mentioned earlier, plus construction spending for July. Still to come, a man who has spent many years studying trends makes sense of the stock market's wild moves. Plus, what is clawing away at lobster prices? And why there's a big spill of call options in some oil stocks. We'll be right back.
The restaurant business hasn't exactly been fighting for scraps, but it's not been an easy summer for those who work in it. Despite a slight increase in same-store sales and the number of customers going out to eat, rising wholesale food costs are causing restaurant owners to be somewhat mixed about overall economic conditions for them in the months ahead. The National Restaurant Association's Performance Index registered modest declines in June and July.
Beef prices are pumped up, but Americans are shelling out fewer dollars for lobster. Jackie Keenan claws her way through this report from Florida.
Bibs on, claws out, and fire up the grill. But forget the hamburgers. Throw lobster on instead.
It ain't going to get any cheaper than this.
Here at Lobster Haven Market and Restaurant, business is booming because of the sea of red inside. Lobster is cheap for lobster standards. Prices have taken a dive in recent years.
Prices did not dip quite as low as the last 2 years, but the last 2 years they dipped dramatically.
Lobster's affordability comes at a time when environmental protections are helping lobster's reproduction. Others say warming oceans are contributing to the glut, though the waters are colder this year. But while the consumer wins, the fisherman loses.
Us on this end want the price to stay low, but if I also realize if the prices stay too low that the fishermen will never make money and they tie their boats up, and when they tie the boats up, they'll drive the price up.
But prices are going way up for restaurants that specialize in meatier fare. Across town at the historic Columbia restaurant, tourists flock to dish on local favorites like ropa vieja, arroz con pollo, and the Cuban sandwich. But while they dish on good food, restaurant operators are eating the costs of higher meat prices.
We grin and bear it as much as we possibly can. You know, we recognize about a 15% because we only buy the upper 2/3 of the meat, and the cuts that we buy are obviously in a lot more demand.
Pork is up 13%, ground beef 11%, and the forecast is for meat to stay sky high. In July, beef prices hit $3.84 a pound. And with lobster at $3.50 per pound, you might want to grab that lobster tail while it's still cheap to do so. For First Business News, I'm Jackie Keenan.
Our thanks to Jackie for that report. A rising demand for seafood is coming from China, but even that has not been enough to cause a price spike in lobster. Coming up, how geopolitical conflicts could send oil stocks higher. That's in Chart Talk. Plus, the secret weapon professional traders use to pick tops and bottoms in the stock market. Don't miss it. We'll be right back. For some technical talk on this Tuesday, Ron Steinberg, the founding partner of Future Road, joins us for what he sees happening in the market. Good morning to you, Ron.
Good morning. How are you?
I'm doing well, and you are a veteran in the industry. and you supply market information to traders, and they make decisions off that information. So can you tell us, do you see a big correction happening soon in the stock market?
I think it depends on your time frame. I still actually think that the markets have room to go on the upside. It's just a matter of when they correct and how far they correct. I think that in the intermediate term, I think we've got at least another 30 to 40 points in the S&P, if not more, and the NASDAQ, relatively speaking, may even go a little bit higher. If your time frame is real long term, I still like the market, but after this move back to the upside, and I'm not saying that we can't have a shorter term correction back down before we make this move back up. After that time, we could get a larger correction, which could take 6 months or so. But I think for now, the market still looks good.
When you're watching the futures, then what are you telling traders? What advice are you giving them?
Well, I basically deal with day traders, and for the most part, I'm telling them where support and resistance is, where I think the market's going to, what patterns are developing. I'm providing an educational service and trying to teach what patterns are in the market. Is it a pitchfork? Is it a channel? I do a lot of price-based analysis in the market. So just for example, on Friday, the market moved up X number of points above the S&P high, and then when it came back down through the close, it traded the same distance where we found some support, which was in conjunction to other price-based techniques that I may use, such as market profile areas.
As I mentioned, you've been doing this for quite a while now, so people are talking about this market as highly unusual. Do you find it to be so?
Well, I think a lot of people look for tops in the market, and it is difficult, particularly for people who have come from the floor, and most of the traders that I deal with are floor traders, and they keep on looking for tops and saying this market can't go up forever. But the patterns, things such as trend channels and what I call positive reversals, which basically means that the market keeps on making lower values on indicators such as RSI, but moves higher, turns around from higher closing prices, means that the market really isn't ready for major correction just yet. It may come soon, but I just don't think that the market is ready just yet.
We love to have you here. Thank you, and come back soon.
I appreciate it. Thank you.
Still to come, why the options market is betting heavily on a rally in oil stocks. Chart Talk is next. In Chart Talk this morning, Joe Keenahan at TD Ameritrade joins us to take a look at some of these oil plays. Good to have you on the show this morning.
Good morning, Angie. How are you?
Great. Let's talk about Occidental Petroleum. Lots of call spreads out of the money, indicating traders think this stock is going higher. What is going on here, Joe?
Well, you know what? It's very interesting, Angie. They are buying particularly that November 110, 115 call spread. We saw a lot of that trade on Friday right before the holiday. What's really interesting to me about that is that's actually above the 52-week high. So even your viewers who don't necessarily follow options as much can take something from that. This is a stock that bears watching. It's held in there a bit while the price of crude has gone down. So I think this is one that's going to be on my radar now for the next few weeks.
Why is it? I find this so fascinating because we are watching Brent oil, for instance, because of the situation with Russia. But here we are with oil stocks and Exxon. What do you think about Exxon going higher?
Well, actually, again, a similar situation, Angie. If you look back early last week, we saw some call buyers in there in the October timeframe. I think what the stocks really may be telling us, what the market may be telling us, is there is a big thought that the price of oil may rally back, and if it does so, it would take these stocks higher. Also, as you mentioned, the whole geopolitical situation, if that does blow up, that would be an instant catalyst to oil, which could be a catalyst to these stocks. So again, as long as we have kind of this conflict going on overseas, I believe you'll see these stocks be in play throughout the rest of the fall.
Thank you, Joe.
Always a pleasure.
That's it for today. Coming up this week, it's tempting to buy high-yielding stocks, but if everybody's doing it, is that play overdone? Find out on our show. From all of us at First Business, thank you for making us a part of your day.